All right, let's talk about the wild public debut of Starfighter Space, ticker symbol FJT. This is a little-known aerospace company that basically just blasted onto the New York Stock Exchange, and, well, it got traders everywhere talking, and fast. Okay, let's get into it.
I mean, that's really the big question here, isn't it? This is just a classic story of sky-high hopes slamming into a pretty harsh reality. And it all played out in just a couple of weeks.
So how did it all start? With a bang, and that's putting it lightly. The public offering price was set at just $3.59 a share. But get this, when it started trading on December 18th, it opened at $10. That is a staggering 180% jump right out of the gate. Yeah, you could say investors were excited.
But that excitement turned to alarm, and it happened fast. Just a few days later, on December 31st, the stock took a 27% nosedive in pre-market trading, a really brutal reversal that left pretty much everyone scratching their heads, wondering what in the world was going on with this company.
So to really get that volatility, first we've got to understand the promise. What was it that got investors so pumped up in the first place? Well, it all comes down to some seriously unique and powerful technology. And this, right here, is the headline. This is the big deal. Starfighter Space isn't just another aerospace company. They are, by their own claim, the only commercial company on the entire planet that can sustain Mach 2 flight.
And just so we're all on the same page, Mach 2 means you're flying at twice the speed of sound. It's an absolutely incredible feat of engineering, and it's the very core of their whole business model.
Now, what's really interesting here is how they're actually using this tech. I mean, they're not just flying fast for the fun of it, they're operating a fleet of 7 F-104 supersonic jets out of NASA's Kennedy Space Center, which is, a very prestigious address. Their main goal? Using these jets as first-stage launch platforms for small satellites. And just look at that client list. Lockheed Martin, GE, the US Air Force. We're talking about serious, high-profile customers here. And to fuel all these big ambitions, they pulled off a successful Regulation A IPO. That's a type of offering that lets smaller companies raise money from the public, and they brought in a cool $40 million. Now that capital is all earmarked for R&D and for scaling up their operations to meet what they believe is a growing global demand for launching satellites. The company's CEO, Rick Svetkov, he really framed it perfectly. He didn't just see the successful IPO as a win for his company, but as proof that investors are just plain hungry for innovative new players in the commercial space game. But as we already saw, that initial belief, it got tested pretty quickly. This is where the promise runs headfirst into peril, and the story gets a whole lot more turbulent for those same investors. And this just perfectly illustrates the roller coaster ride. December 18th, the big debut. The very next day, the stock shoots up an incredible 136%. But then, by the end of the month, that 27% dive just wipes out a huge chunk of those gains. It was a chaotic start, to say the very least. So, what caused that sudden drop? Well, it wasn't just random market jitters, it was specific, bad news. Reports were coming out about significant delays in the company's main business of satellite launches. And this was the first major red flag. And when investors went looking for some solid ground to stand on, they found, well, not much. The sources are pointing to a complete lack of documented financial data. We're talking no revenue figures, no income statements, no profitability metrics, nothing. And without that fundamental data, it's pretty much impossible to calculate a company's true value or justify its stock price. So investors were essentially flying blind, forced to rely on gut feelings and hype instead of any hard numbers. So you see the massive conflict here, right? On one side, you've got this incredible hype and a futuristic vision. And on the other, you've got this stark, gaping hole where all the financial data is supposed to be. This table just lays out the dilemma perfectly. The bull case, it's compelling. You've got unique tech, fresh cash, a ton of retail buzz, and big-name customers. But the bear case is just as powerful. Extreme volatility, real operational delays, a total lack of financial data, and, the huge risk that comes with such a speculative sector. And to really get a feel for the hype, you just have to listen to the retail traders themselves. Over on the platform StockTwits, the sentiment was called extremely bullish. One user even called the company's debut the birth of a giant, comparing it to companies like Tesla. You could practically feel the hope. And that's the disconnect right there. You have this massive, extremely bullish feeling building up online, but it's set against a complete and total void of actual financial data. It's a classic case of a story stock, where the narrative is just running way, way ahead of the numbers.
Which brings us to our final question.
How are you supposed to look at a situation like this? Is it a ground floor opportunity to get in on the next huge thing? Or is it a giant flashing warning sign?
One expert, Tim Bowen from Stocks to Trade, he offers a really simple but powerful piece of advice. He basically says that if your analysis still leaves you guessing, it's probably a sign to just stay on the sidelines. In a situation with this many missing puzzle pieces, caution is probably the smartest play.
And so that's where we land. With its one-of-a-kind supersonic tech and its massive ambitions, Starfighter Space could absolutely be the giant that retail investors hope it is. But with its insane volatility and total lack of financial transparency, it could just as easily be a flight of fancy, fueled by hype that just can't stand up to the gravity of the market. I guess only time will tell.